In today's session of Visual JForex, we will get familiar with the TEMA, the triple exponential moving average. This is a derivative of the exponential moving average, and this was designed in mid 90s to reduce the lag which is there in most of the moving averages and try to keep up with the price momentum while doing the job of the MA, that is of determining the trend and helping the traders take the trades with the trend. Let's get started with TEMA. From this short description here you can make it out that this is an exponential moving average of the exponential moving average of the exponential moving average, and that's why it is called triple exponential moving average. And you can even Google the formula, and you will see that it is based on the exponential moving average, and then we have to carry out the process twice to get to this TMA. It tries to remove the associated lag in a normal means simple moving average and the exponential moving average, and with that it mostly keeps up with the price momentum. So if there is a sharp turn in the either direction in in reduced time, it will be up with the price action. But there is also one concern that since it tries to follow the price action closely, we might be lead into the wrong trades as well. So we have to use this indicator carefully. There is no such thing that one exponential moving average is better than the another. So it is kind of a uh, based on preference. You have to see what works better for your setup and then decide accordingly. So let's get started. Here we will see the description for the TEMA. Here this is the mathematical formula for the calculation, and as you can see we have to multiply the EMA by 3 and then again take the EMA of the EMA and then multiply it by 3 and reduce that second result from the first result, and then to that we have to add the EMA of the second EMA, and then we get to the TEMA, triple exponential moving average. So this is part of the MA series. Here it is listed under these MA indicators. Here comes our TMA block. This is the Visual JForex platform developed by the Dukascopy Bank SA, on which we can develop our automated trading strategies, trading algorithms. The start point is a must, it is mandatory, and any of these three can be used or all of the three can be used. Here you have the brief description for the underlying indicator. Then coming to the input values, as we have done in earlier sessions as well. Still, if you are new to the session, I would like to explain that this instrument, default instrument, is the instrument of our choice on which we want to design the algorithm. Suppose if you want to use the Euro USD, then you don't have to make any changes. But if you want to choose a different instrument, then you do have to go down this drag down list and choose the indicator which you want to use for trading purpose, on which you want to develop your automated trading setup. Here we will not make any change in today's session. Now coming to the time frame, time period is crucial, on which time period you want the EMA, the TEMA to be calculated is of high importance. While determining the trading setup, you have to determine on which time period you want to trade, and accordingly the trading signals will be generated. Now let us add the TEMA on this chart so that I will be able to explain to you the TEMA in a easy way. So here this is the TEMA. This TEMA is being calculated for the time period of 30 hours. This is the TEMA 30, and since this is hourly chart, it is being calculated on the chart's time frame, that is per hour. You want to change that, you can change that. Now, as you can observe from this charting, that the TEMA tries to follow the price action closely. As you can see, there is not much in lag, and as and when there is a change in the momentum, we see that being immediately, not immediately, but still fairly quickly being reflected in the TMS, this overlapping with the price action. As you can observe, whenever there is a big price move in TMA, the TMA tries to follow the price action. And one key concern is that, as you can see from the chart as well, since the price action and this charting for TMA is kind of overlapping, it of course indeed gets a bit difficult to make out the trend. And one way to go is that you say that the last hourly close should have been above this TMA, and then the price action, the TMA values were rising. In that sense, that is the uptrend. When the TMA values are going down and the price action is on the lower side of the TMA, then you can turn that trend in the bullish, in the bearish phase. So that way it will work. But many times we see this kind of situation in which there is not much an directional trend in the underlying instrument, but rather zigzag moves, the range bound moves, as you can see in this instance. So during such instances, it indeed becomes difficult to trade with the TMA. But those who don't like to have the lagging indicator like SMA or EMA guiding their trading setup can indeed depend on the TEMA, and it should hold well if you can figure out and customize the setup accordingly. Now here, if you want the calculation to be done on the different time period, so that is also possible. All you have to do is change the TMA's time period, and you will have this setup in which the clarity is a lot more compared to what we were seeing in the 30 hours time frame. Now here the directional change is not happening that frequently, and one way to use this TMA is also to use it as an entry point after pullback. So whenever you see that price action is on the lower side and the TMA values are falling, you can use pullbacks like this when the price after due consolidation gets closer to this TMA, and then we can look for opportunities to get involved. And then, as you can see, that we again see fresh reversal happening, or you can say continuation of the underlying trend, and the price action continues to move lower. And even on the higher side, on the buy side, such instances have happened where the price action got close to the TMA, and then from there onwards it turned higher again. So in that way also the use of TMA can be done, and TMA is fairly useful, as I have said while charting and while also starting this webinar, that it reduces the lag. And even though this indicator is being calculated for 100 candle periods, candlesticks, still we are seeing that it is pretty responsive, and as soon as the price action changes its course, we see the change happening in the TMS trajectory as well. And that's one of the reason why many of traders choose this indicator over the simple exponential moving average or the EMA. But you have to be careful that there are some drawbacks as well, and while designing the system you have to take this into account. So I hope you have been able to understand the features of the TEMA from the chart. Now coming to the customization of this indicator block, as we were looking at the hourly data. If you want the calculation in the automated setup to be happening on the hourly data, all you have to do is choose hourly here. Then shift is the instance, or you can say the time of which the output value is going to be taken into consideration. If the shift is 0, that means the current hours value will be taken into account. If the shift is 2, then the 2 hours back value will be taken into account. So if you are putting the output value for any conditional loop, or in any calculation, you have to see that shift value is appropriate. Even for comparison purpose, you can take multiple TMA blocks, assign them different shift values, and you will have the values for the TMA at a different point in time, and then you can do the comparison to see whether the TMA is rising or TMA values are falling. So that way also it can be used. And this parameter of the time period is the period of these candles here. If we are taking into account the 100 candlesticks, then we are doing the calculation for the TEMA on the 100 hours. So that's how it is. And you have to define this time period data to a suitable value whichever serves your purpose. Now coming to the output value can be put into any if-else statement for the conditional determination of the trading opportunities, or you can use these for calculations in calculation expression, or even you can do the comparison between the price action and the TML levels. So there are multiple ways in which you can utilize these output values. Now coming to the offer side, the spread is there between the bid side and the ask side. Because of that, minor difference is always there based on which offer side you are choosing for this calculation. And then comes the applied price, and this carries a significant impact on how the calculation is done for TMA's output value. Now here let us see which kind of okay, so here the applied price is closing price. Watch out this price here, the output value for the TMA. As I change the applied price, suppose if we go for a higher price, then this output value for the TMA will shift on the higher side. As you can see, it has shifted the TMA output value for current hour at 1.1754. Earlier it was lower. If we choose low value, it has gone down 1.1739. And similarly we can choose different options as well, like median price, typical price, weighted close price, and also the open price. And all these listed indicator values can be taken as the applied prices, and here accordingly the calculation will be taking place. Now let us again put it back to the close value. So whatever is the closing value for last hour, it will be taken into consideration, and then the calculation will happen. So that's how we can utilize this indicator, the TEMA, for designing the algorithm. All you have to do is take its output value on this board and add some if statements, or if you want to do the calculation, then calculation expression. And also if you want to do the comparison, then all you have to do is bring some TMA blocks again, and you design and define them, and you have the whole setup which will be acting as per the instructions provided, as per the command given. And that's the beauty of this Visual JForex platform. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.